Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to find the juicy bits. We've got Veeva Systems Inc.'s latest report, and folks, this is a good one packed with numbers that tell a story about how they're doing. So let's straight into the core of the report, the financial tables. This is where the real action is. If you look at their balance sheet as of July 31, 2025, you see some big numbers. They're sitting on nearly $2 billion in cash and cash equivalents. That's a huge pile of money right there. And get this, they have over $4.4 billion in short-term investments. That's a lot of liquid assets, meaning they can easily turn that into cash if they need it. When you add up all their current assets, short-term money that can be used quickly, they have almost $7 billion. And across the board, their total assets, well, they're pushing $8 billion. That's a very solid financial footing section. Now let's see how they're making all that money. Looking at their income statement for the 3 months ending July 31, 2025, their total revenues were over $789 million. Most of that, almost $659 million, comes from subscription services, which is great because it's recurring income. Their cost for providing those subscriptions was about $94 million. This means their gross profit on subscriptions was really strong, almost $565 million. That's the money left after paying for what it costs to deliver the service. And the total gross margin percentage for the company was a healthy 75%. That means for every dollar of revenue they bring in, they keep 75 cents before other expenses. They're investing heavily in the future too, with over $92 million spent on research and development in just 3 months to make their products better. And to get those products to customers, they spent over $109 million on sales and marketing. Then there are general administrative costs, which were nearly $96 million. All of this led to an operating income of over $195 million for the quarter. And the bottom line, the net income was a cool $200 million at TA. Now let's look at how that compares to the previous year for the same 3-month period. In the same quarter last year, their total revenues were about $606 million. And their net income was around $171 million. So comparing the two periods this year, they actually increased their net income by about $29 million, which is a solid jump. Total revenues grew by a healthy 17% this year. Subscription services revenue alone went up by about $98 million, driven by both their commercial and R&D solutions. Their cost of revenues also increased, but at a slower pace than their revenue, which is exactly what you want to see. And income before taxes went up by a significant 18% shoe race. It's also important to see how their expenses are growing relative to their revenue. Research and development as a percentage of total revenue actually went down slightly, which could mean they're becoming more efficient in how they spend on innovation. Sales and marketing also decreased as a percentage of revenue, showing good cost control there. However, general and administrative expenses jumped up to 12% of revenue compared to 9% last year. This was mainly due to some significant litigation settlement related charges. Specifically, they mentioned $30.6 million in litigation settlement charges in the 3-month period. This is a big chunk that impacts profitability, but it's a one-time or at least not a recurring cost you'd expect every quarter. Their other income, like interest on investments, also increased by about $11 million. All key end. Now, let's talk about what could go wrong, because every company has risks. Veeva has a pretty long list of risks. They worry a lot about security breaches and unauthorized access to customer data, which is understandable given they handle sensitive information. They also face tough competition from companies like Salesforce and IQVIA, and they acknowledge that if they don't compete well, their business could suffer. A big point is their reliance on new solutions being adopted by customers. If these new products don't catch on, the growth rate of their revenues could be hurt. They also rely heavily on a few big customers. Losing even one of these major clients could seriously impact their earnings. There's also the challenge of migrating customers to new platforms like their Vault CRM. This is a complex process that could cause disruptions or even lead them to lose customers to competitors. And here's a crucial one: almost all their money comes from the life sciences industry. That means anything bad happening in that industry, regulations, drug pricing changes, or even government funding shifts, can directly hit Veeva. They also admit it's tough to find and keep good employees and that difficulty could ramp up their expenses. And like many cloud companies, they depend on third parties like Amazon Web Services and Salesforce for their tech infrastructure. If those providers have problems, Veeva's services could go down too. Looking at their overall financial health and direction, I think Veeva is doing a really solid job. The massive cash and short-term investments they have provide a huge buffer against any economic downturns or unexpected expenses. Their subscription revenue model is a strong point, giving them predictable income year after year, even though they had that litigation charge which hurt their operating income. In the short term, it's important to remember that's likely a one-off event. However, the concentration of revenue from a few key customers is a risk they need to manage closely. Losing a major client would be a significant blow. The competition, especially from tech giants like Salesforce, is also a constant challenge. They need to keep innovating and proving their value to stay ahead. Overall, Veeva appears to be executing well, navigating a competitive landscape and investing in its future. That litigation charge is a hiccup, but their core business remains strong. Alright, that's our breakdown of Veeva Systems' latest filing. What do you think about their financial performance and the risks they face? Let me know in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more deep dives into corporate filings and for more insights and to connect with us. Don't forget to join our Discord community, linked in the description. Thanks for watching everyone. See you next time.